Stock Planner here. Today I want to look at 3 beaten down tech and finance stocks where the RSI is below the 40. RSI is below the 40 over here. And that usually indicates that, hey, be watching for a reversal. I'm a swing trader and I like to get the tops and bottoms and the trend in between. And I use 2 indicators to help me do that. The RSI and the MACD. But also, in my search criteria, I also have where the target price, the 1-year target price, will be greater than 10%. So I'm looking for stocks that may reverse soon, and the analysts believe, and you can't believe the analysts believe that the stock is going up. I'm on the weekly time frame, and because I want it to be a strong reversal, the MACD and the histogram showing below the zero line. Histogram below the zero line usually indicates a downtrend. And I'm looking for downtrends that may reverse soon. So let's break these 3 stocks down. And the first one is JD.com. Well, we just got that. JD.com. This is TradingView. And what they do is it's an e-commerce site. And they're very innovative using robots. And they're located in mostly the big cities. And they have this same day, next day type delivery, very fast, very innovative, and it's tech driven. Its current prices, target prices, are like $27 to $28. It's currently at $27. Well, let's see what TradingView has to say. They're issuing a buy, the analysts, and they're saying it is going to go up as high as $39, which is probably a level of resistance. If it gets that high, we can look at 40 to 50% upside, 44%. I did that with my head. So why the analysts feel it's going to go up? In China, there's still a strong e-commerce volume. They're improving their margins and expanding service into many other China hubs and cities. Some analysts see this stock as undervalued relative to its growth potential. Well, the fact that it's down from its all-time high would indicate that it doesn't have the same value it had before, maybe a year ago. And simply Wall Street has this stock as trading at least 47% below its current value of fair market value based on free cash flow. Earnings are forecast to grow, and it compares favorably with other companies similar. It just hasn't been performing well lately. Remember, we're looking at a weekly time frame. So if you believe that JD.com, after its long slide down, may be reversing soon based on its RSI, and we've seen the RSI go below the 40 here, and nothing happened. And we've seen the RSI go below the 30 and 40, and certainly that could be a good thing. So the RSI is not always a predictor, and the MACD is trying to have a crossover here. That's a sign that it's going to go maybe reverse soon as well. If you think this stock is going up and that support is in this area here, you certainly could sell a vertical spread, a bull put spread, sell some puts. And I recommend going out 3 or 4 months. Give yourself some time, especially if you're a beginner, because I have a lot of faith in this stock. I do think it's going up. I can't tell you when. And neither can RSI or Mr. MACD. Let's go on to the next stock. And that stock is Robinhood. I just want to take a sidebar here. My wife is a beginner trainer. She just decided she wanted to learn more about investing. And we just opened an account with Moo instead of Robinhood. Robinhood, this app is one of the cheapest and easiest to use, but I wanted her to have a few more extra tools, and that's why we chose Moo. I just thought that they would offer more flexibility and more opportunity to analyze the stock. I don't know yet, but I do know that lots of people are trading Robinhood, and their brokerage account, they offer free trades in stocks, crypto, options, and they also allow you to predict the market conditions. A lot of stocks, I use Interactive Broker, and they allow that predict the future type based on, true or false. It's currently at around 75. Analyst rating is a buy. Of course, the technicals based on this downward trend is going to show a sell, but we're trying to predict when it might reverse. And the target, they're saying, is 130, which is 70% increase. 130 is way up here. Let's put that up there. Using Simply Wall Street, Robinhood is saying that this company is not, according to the method they use, which is free cash flow, is not undervalued, but the future looks bright for it. And this is a snowflake, you want it to be big and green. It's not. Earnings are forecast to grow by 12%. That's good. Not as good as last year. Again, when the RSI is below the 40, does that predict a reversal? That did, and we don't know. Earnings a few months away. They just reported. MACD says we're still in a downtrend, but we're looking for reversals, and we're looking for stocks that are in a strong downtrend and may reverse hard and go up. Robinhood is one of those stocks. And again, I'm telling you, lots of people are trading this, so it has a lot of volatility at the moment and can give you a lot of premium if you're trading and selling puts or credit spreads. And the reason why Robinhood is maybe expanding and reversing is they're expanding their product line by offering other paid capabilities like subscriptions, offering more crypto products, and other new offerings that could spurn growth. Well, they're looking at new revenue streams. So what do you think? Do you think that Robinhood is about to bounce, or do you think there's more downside to it? That's called trading. Remember now, this is a chart weekly time frame. You're going to see other results if you go down to smaller time frames. I like it because my option trades go out 3 or 4 months, and it's less noise using the weekly. And I'm trading good stocks that I want to own forever. Well, the last stock I want to talk about today is Affirm Holdings, ticker AFRM. Again, it's another popular stock with option traders. TradingView chart, weekly, less noise. And we can see that it's been in a bit of a funk lately. But what do they do? This stock is it's a fine tech stock. But if you want to, if you ever go on eBay and you buy something for $30 and they ask you, do you want to make 4 easy payments? That's probably Affirm. Buy now, pay later. Fine tech. It's helping consumers split payments with the merchants at checkout. Some analysts put the price target around $50, and it is that. But the TradingView analysts say this stock should go up to 90, almost back to where it was in this area here. That's about 70% increase for where it's at. But what is that based on? The analysts feel that this kind of situation, buy now, pay later, is growing, especially if our market is still turbulent. And this type of fine tech stock could drive purchases of higher priced items, which would increase the revenues. And the analysts feel that more and more people are going to use this kind of product, buy now, pay later, over the next 10 years. So they're giving this stock a very favorable rating, and it's rated as a buy. Now let's see. We had RSI below the 40, and it's now below the 40. How did that? Well, that predicted that, so that's a check. Yep, check. And I'm hoping, we don't know, but I'm hoping that's a check. The MACD is saying, hey, it's still going down, and our histogram is red. So I want a stock, when I do this reversal stuff, I want a stock that's been trending down and about to reverse. What do you think? Is this stock one of those? And if you believe this is at its reversal point, you could sell a put or a bull put spread 3 or 4 months out, and I think it would be an easy trade. Now, there's going to be some comments. Please leave a comment below, but people will see this as level of support and bounce off that level of support. I'm always a quick draw gun and maybe too early to the dance. but I do think now is the time to look for a reversal for AFRM. So today we looked at 3 stocks. Affirm, that the RSI says it's going to reverse. Robinhood, which probably is my first choice. And JD.com, which is my second choice. This is a cheap stock, so it might be perfect for a beginner. So what do you think of these 3 trades? I'm using the RSI to alert me for trend reversals. I took a look at some past history, and I have been trading these stocks all this year. So I'm very familiar and comfortable with these stocks. That's all I have for you today, but remember to do your own due diligence. Create your own watch list of stocks that you'd like to have forever. I have 30 on this list, and my domain is much bigger. It's about 200 stocks, all stocks that I want to look at. But I'm not looking at 7,000 stocks every day. I'm only looking at names that I know and love and a little bit familiar with it, and probably could tell you what they do. I'm not a full-time trader. I have a business that I'm running, and so swing trading once or twice or 3 times, 4 times a week, I do it every day. But it doesn't take a lot of time away from my other business endeavors. If you're a beginner, take the time to learn this, do some paper trading, and I guarantee you, if you learn it yourself and not copy trades from somebody else, you'll win for life. Happy trading. We'll catch you on the flip.